For market analysis this month, we are doing a deep dive into the two top fund domiciles in Europe, Luxembourg and Ireland. We have seen net assets fall in both domiciles. Luxembourg assets fell in both February and March according to the CSSF for the first time since June 2017. Overall though, growth remains strong with AUM increasing between March 2016 and March 2018 by 754 billion euros or just over 22%, reaching 4.15 trillion euros. I have the pleasure of being joined in studio by Denise Voss, Chairman of ALFI, which is the Association of the Luxembourg Fund Industry, and Stephen Levy, who is the PwC Luxembourg's AWM leader. Denise, Stephen, thanks for joining me.
Thanks.
Let's start with you, Denise. We have seen right now that the numbers, especially in March and February, have stalled for the Luxembourg fund industry. How do you see that?
Well, I guess I wouldn't say that they've necessarily stalled. In fact, really that is the slight reduction in net assets under management is a result of the markets and the volatility we've seen in financial markets since February of this year. So in fact, if I look at the net new money coming into Luxembourg investment funds in January, it was exceptional, in fact, for the month, but February, March are pretty much in line with monthly inflow last year.
Stephen, the number of funds, if I look at it, in Luxembourg, they peaked in December 2016 to 4,144 funds, but have gradually gone down to 3,996 funds in March 2018. What is the reason here?
I think part of it is just in terms of, it's more, you have to look at it a bit broader. From a European perspective, you've had a certain amount of rationalization that has occurred. A lot of that's due to costs in terms of just the pressure that is on asset managers to relook at their product ranges. So some of that in Luxembourg was within these big fund ranges called umbrella funds. And so we did have some rationalization that occurred there, but we also had investment managers looking at their product ranges across Europe, and actually a lot of them rationalizing into the Luxembourg market, into the ranges that we have within the market.
And I think it's also important to say, in fact, not just to be fixated on the number of legal structures, which was the figure that you quoted. It's also the number of investment strategies that are included in these investment legal entities. And that actually, there are some rationalization going on with that, but then there's also actually issuances of new share classes because of new distribution models, new investors. So there's, yes, some rationalization, but it's intelligent and probably needed rationalization.
So what do you think, what will be the growth drivers in this year and in the coming years then?
Well, the growth drivers will certainly include, I mean, this is nothing new, but it's probably becoming more acute, if you will, demographic changes, so aging of the population and the pressures on the state pension liabilities. But then there are also some positive demographics, I'd say, as well. In fact, there are many middle-class individuals or individuals who are achieving the middle-class status, if you will, around the world, and in China and Brazil, for instance. And why is that important for Luxembourg? Well, our investors, we have investors resident in over 70 countries that hold Luxembourg UCITS. So that's quite attractive for our industry.
Probably one of the drivers that we're going to see as well is going to be a lot around responsible investing. There, if you look at the place that Luxembourg plays in terms of this area of investment, it's really significant. We have a significant market share within ESG funds, and really you see in the investment managers that are embracing the ESG approach into many of their products because this is really the investor preferences are going towards that. So we really see, I think, that will continue as well to support the growth within the market.
Just looking at Ireland, and I was going through some news coming from there, we see that they are thinking about bolstering their position as the ETF lead domicile country. We know that they are considering if they should relax the portfolio disclosure rules for active ETFs. So what is Luxembourg doing in this area and also for other asset classes other than ESG, what you mentioned? So what are we to expect here?
Yeah, maybe just to start out. Yeah. I mean, it is true that the Irish market really does have has had a good uptake in terms of the ETFs. What they're doing, they've looked, I think, at what the Canadians have done in terms of greater transparency for the disclosure of the portfolios, really towards the market makers. So I think that's in general, these are moves that are occurring to anticipate a bit probably regulation. But overall, it's probably really good for the overall, ETF market in terms of, the interest in the market, the need for these types of products, and will certainly going to benefit as well the Luxembourg market.
No, I would agree with Steve. In fact, as we know, the take-up of ETFs around the globe is growing, and we continue to see new ETFs being set up in Luxembourg, and even ETFs being transferred to Luxembourg from other domiciles. So clearly, the Luxembourg ecosystem is able and ready and expert in terms of setting up, administering, managing, and distributing ETFs, again, around the globe. So I'm quite positive.
So great to have you both here, and I hope I can invite you back again in a few months to see what the predictions were and where do we stand going forward. So thanks again, Denise. Thanks, Stephen. Now moving to Ireland, despite a drop in the net asset value of domiciled funds in February this year, we saw a growth of just under 33% between February 2016 and February 2018, amounting to almost 600 billion euros to reach 2.42 trillion euros. During the same period, the number of funds steadily increased from 6,257 to 6,228. Let's have a look at what's been making news around the globe.